Have you heard that you should avoid PMI when getting a home loan? What if asking for PMI could save you hundreds of thousands of dollars on buying your next home? Here's the real truth about PMI and why it could be your best financial move ever. What is PMI? PMI stands for Private Mortgage Insurance. Mortgage lenders require PMI when borrowers put down less than a 20% down payment. This is a form of insurance which covers mortgage lenders in case borrowers default on their loans. It actually helps borrowers by giving lenders the courage to make bigger loans. How much does PMI cost? PMI is charged as a percentage of the loan amount you take out. It is often paid monthly along with your principal and interest payment. We have some of the lowest PMI rates in the country, with borrowers paying just around $130 a month on a $700,000 loan with just a 5% down payment. Why you want PMI? Let's say you find a $700,000 home you love today. You can only afford 5% down and you can get a loan at 2.75% fixed for 30 years. If you decide to wait just 3 years to save up a 20% down payment, that same home could get far more expensive. If the property goes up in value by just 5% per year, you would pay over $100,000 more for the same home because it is now worth over $810,000. That could have been your $800,000 home that you wisely picked up for only $700 because you purchased earlier and took a small PMI hit. Now, only 3 years later, that 20% down payment is up to almost $165,000 and has cost you over $100,000 worth of missed equity. The math is clear. The time to buy is as soon as you can afford to. Interest rates are on the rise, so it's not hard to imagine rates getting to 5% by the time you could save up. If they do, you would pay $700 more a month and almost $300,000 more over the life of your loan. Where we're going with this is, you should know that PMI is temporary. Once your home appreciates or you pay down your balance to owing just 80% of the current market value, you can have PMI removed. Even if you have the cash, it may be wiser to borrow and keep more liquid cash on hand for emergencies and financial flexibility. Alternatives to PMI. There are some alternatives to monthly PMI too, such as piggybacked second mortgages, paying cash and refinancing later, special loan programs like VA loans, paying PMI upfront in a lump sum, or rolling the PMI into your interest rate. Get in touch with your Seattle mortgage broker today and find out how much PMI would be for you and the huge savings it can offer. Thanks for watching. If you liked this video, if it was helpful, please hit that like button and subscribe to our channel if you aren't already. We produce regular content specific to the Seattle real estate market. If you have any questions on anything we've covered in this episode or any others on our channel, give us a call, visit our website, and we'll see you next time.